working, but good. Hello, Ryan.
Hello.
Hey, what's up, buddy?
How you doing, mate? You all right?
I'm doing all right. It's Friday. I'm hopped up on a lot of coffee. It's 4 in the morning. Well, actually, just turned 5 o'clock in the morning, so I'm doing good. Doing good.
Good.
Hey, by the way, it looks like we should have YouTube up and running. We also you have 30 minutes. Well, actually, you have 28 minutes for the non-farm payroll competition. I want to make sure that everybody is in that. And matter of fact, as I'm talking, I'm going to actually quote this tweet. And don't forget, excuse me, because I can't type and talk at the same time. So I wanted to get this out to the public this morning. You have 27 minutes to guess and win. All right. Answer the tweet below. Okay. So anyway, we are less than 30 minutes away from non-farm payroll. So Brian, what say you? You've been up and you've been around prepping everybody on the Flow show. Tell us how you're feeling about non-farm payroll and what you're looking at right now. I think it's an easy trade, by the way. An easy trade meaning not ahead of the data, but post data. I think it's going to be fairly black and white. But let's hear what you have to say first.
Yeah, I've just realised I didn't even put my own guess in, so I need to get a move on with that one. Um, yeah, it's funny. It's such a lottery number, as we know. Given the data we've had so far this week, I won't be surprised if we get a 200 plus number, just to knock everyone out and turn the tide, and we get an unemployment rate of 4.1 or something silly like that. That would be par for the course. But I think
Right.
it's pretty binary what you do with it. If we get a good number, and I mean nothing that sort of blows the doors off and changes the Fed's thoughts, then you've got to keep those in the back of your mind. The Fed is going to continue cutting whatever this data is. If it's bad, then we're going to play the 50 pip game again. If it's good, yields will rally, dollar's going to rally. But I think you've got to look at where that gets limited, and I'll be watching yields closely for that.
Yeah, if let's talk about bad data. What is bad data, and what's the market going to do in response to that? Because that's the big question for me.
Yeah.
Not when I say the market, I should say quote the market, meaning the S&P, because we're all kind of all kind of a slave to what happens in the S&P right now, like the entire market. And I was having this conversation with actually Steve yesterday. We were talking about some ForexAnalytix internal stuff, development stuff, and we started talking about the markets. And we're both in the camp, and you guys you're probably in the camp too, and understand what I'm about ready to say. This is such a fixed market, and like the S&P is just, it's between what central banks are doing, central planning, and what's happened with managed funds over the course of the last, couple of decades. There is only one direction in the stock market, and it is higher, at least at this point, until something really bad happens. But that's why, like, you look at the markets and you look at the S&P and you're like, okay, I don't care what the data is, just give me a pullback, because that's going to allow me an opportunity to reload the stock market. But what I guess the question I'm going to ask you here is, what would turn the S&P lower, and would it be more than just an hour's worth of a reversal? Because this is a really big breakout point that we're testing right now. Well, that we've tested all week, and if it breaks that, I have a feeling it's going to be more than just a day's pullback. It might actually end up being a week or two worth of a pullback.
Yeah, well, I think that the key number today, obviously,
Yeah.
that we're going to go scatty for the headline number. The key number
Okay.
is that unemployment rate. That is really going to be the decider because of the Fed's number. I can't remember what the Fed's number is for the rest of this year, but I think, is it 4.4% for next year? I'll have to check on that. But, you know, they've got a number of 4.4% in their forecasts. And
and that's the Fed. I think that's at next
yeah,
year, if I'm not
next year.
mistaken.
Yeah. So at 4.2%, they've not got a lot of margin of error.
Yeah.
So if we get a number like that, 4.4%, then that's going to signal to the market that the Fed may have to go for a 50. It's going to cut faster. And not only that, but if unemployment is rising that high, that's going to put a pressure on consumer spending. That's going to put a negative impact on the economy. That, in old world terms, should be bad for stocks, and that might give you your, you know, your sustained move lower. But if you've got to take that participation rate into consideration as well, because that can have a big effect on that unemployment rate. So you've always got to counter it. But I think today the unemployment rate and going forward is probably the most important number to focus on right now.
And look at the trend just for the last 5 payroll reports, so you guys can kind of see what's happening here and why it's becoming more of an issue. And we are expected at 4.2 today, if I'm not mistaken. That's the consensus, which would match last print.
If we get that or better, then stocks probably rally because, you know, there isn't big unemployment, or unemployment isn't growing significantly, and people are going to keep spending. People have still got jobs, people have still got wages, and so it's going to be good for the economy.
Okay, well, let's discuss that a little further. So good for the economy, good for wages. The dollar would rally, and in my opinion, you look at this dollar yen, that is one hell of a squeeze this week. And, you know, it screwed everybody on positioning this week. You know, everybody is like, what, wait, a Shiba who? And then, you know, the market dropped. And then everybody's like, wait a second, I just sold yen at the end of last week. That is completely reversed. So everybody's stuck on the wrong side. Strong data, unemployment at 4.1%. We create more than 100,000 jobs. So let's say we create 110,000 jobs. I know it's below the headline number, what everybody's looking for, but let's say we create 110,000 jobs. Let's say we create 170,000 jobs. This dollar yen is going to be trading up at 150, in my opinion. What are your thoughts there?
Yeah, it could do. If it breaks that 147 and properly breaks it, well, 147, 20, 25, because we keep getting little extensions there to that 20 area. Yeah, it could be off to the races. But as I say,
look at that bull flag pattern.
Yeah.
Beauty, right?
Yeah, if you like flags.
I do.
But then it comes back to the yield situation, because the Fed is still going to be cutting rates. That's the end game. They want rates down. Mm-hmm. So you're going to be limited in your rally in yields, and if you're limited there, you're going to be limited in your dollar gains as well.
Yeah.
So if it coincides with, you know, 10 years at 3.9, 2 years at 3.8, 3.85, then I would say that's a bit of a limit for your dollar rally if you hit those levels.
Okay, well, let me ask you this then. What do you do with the euro in either situation? And guys, don't worry, we're going to bring in Stelios. I know he's here. We're going to talk precious metals. We're going to talk more about equities and kind of you know, the future of equities here. But I want to get a couple of currencies in and out of the way, because I think there's some really great setups. Look at this euro. We had a bull flag pattern. We basically this week rejected, you know, you could say it's a you know, 14-year trend line above 112. We basically hit it and came really close. And again, my trend line is not the trend line of the head euro trader at Goldman Sachs. That guy's probably trend line matters more than mine, and he might have had his drawn a little bit differently and banged the shit out of this thing when it hit 112. Anyway, you look at it now from a technical perspective, and we had a flag pattern. It is nullified below 110, and we will have a double top, probably take us down to the 200 DMA. That would be on strong data. Euro would be trading probably below 110. What do you say about the euro here?
No, I agree with that. We're only 30 pips away, so that 28 pips away. So of course we're well within target of that 110 break-in on good data. Um, with situations like that, when we're on big levels like dollar yen, we're close to 147. You have to see what happens after. So initially, in the first 5 minutes, if it's a big move, that 110 can be smoked. But if
Yeah.
10 minutes later we're back above it, that's when you've got to be careful
And that,
because it could just be a fake out.
yeah, okay, so let's talk about this really quick because you bring up a great point. This is pure trading. This is pure price action. I am in the camp that if the data is really strong or really weak, beyond expectations, something that we go, holy shit, that was wait a second, I wasn't expecting that. We get that reaction coming out of my mouth or your mouth or anybody else's mouth. That's when you get a trend day on a Friday because no one wants to get in front of it, right? It's like let's
Yeah.
just say I'm gonna use some numbers here. Let's say that we have and let me get rid of that to close this up a little bit. So let's say we create 160,000 jobs. Unemployment drops to 4.2%. The participation rate is still solid, maybe comes in, matching, and average hourly earnings tick up. Well, that across the board, and it doesn't go to 4.3%, is at 4.4%. Across the board, that's a strong piece of data. And that is when, in my opinion, you see the euro break below 110. And as we go through the European close and the rest of the day, the euro is gonna be hit on any type of uptick because no one wants to be long, no one wants to get on the other side of that going into a Friday and then on top of it, you think about the Middle East tensions, and you're like, shit, how about if there's more bombs or missiles being lobbed back and forth, and maybe a nuke gets thrown in there. Why would I want to be long the euro? They're the closest to Israel. Screw that, and I'm out. You know what I mean? That's when you get a trend day in a situation like that. What you're saying is maybe we have data that's not horrible, not horrible, but it's not like the best data we've seen. Maybe unemployment ticks higher, but the headline number is bigger,
It's solid. It's all
stronger.
in line, sort of thing.
Yeah, it's all in line. You get a push below 110 and you get a wick back above it. Would you, and I'm asking you this,
Yeah.
knowing what's happening this weekend, knowing what's happening in Israel, knowing how Iran probably is just itching to retaliate even more, would you be willing to buy the euro?
I'll be tempted to do a little one, but you're right. The risk, the weekend risk is heavy. We
Yeah.
know Israel still potentially going to retaliate, although it
Mm-hmm.
does seem at the moment they're going to that they've given comments that they're going to do it close proximity
Right.
retaliation. They're going to go in and target certain areas. It's not going to be a blanket thing. So yeah, you've got to take that risk event into consideration this weekend. Whatever you're trading,
100%.
whether it's yen, oil, commodities, you've got to think about what you want to have sitting on going in. Can always
That
come in
is
Monday if we're trading 110, 110.10 on Monday in euro dollar. Nothing's happened, then I'll consider buying it then.
okay. And so with that being said, I'm going to let you think about this for the next 10 minutes. I'm going to bring in Stelios and look for some comments from Stelios, and because I'm sure he's got things he wants to say. But I'm going to leave you guys with this because this is all a planning process ahead of the weekend with a big weekend ahead of us. And it's not just the jobs report we're contending with. I mean, yes, we can trade around the headline number but you also have to take into consideration how the market's going to position itself going into this weekend. I am going to tell you this right now. I am only trading one side of this market today, and only in one situation. If something happens that I don't that if something happens in 15 minutes that I don't want to see, I'm not trading. And I'll tell you what that is, so make sure you all stick around for that. And then Ryan, I'm going to be fishing back to you about what you think the best trade up trade setup is in either situation, if if at all. So Stelios, good morning, happy Friday to the Greek yacht god of planet Earth. What's happening with you?
Hello everybody. Yeah, I really agree with what you say. I think today the data has to be significantly worse than expected for the dollar to really sell off. And for me, the whole weekend risk is a very important thing. And I don't think it's euro related. It's more that the dollar gets bid as soon as there's any kind of danger geopolitically. So that's going to be a very big deterrent for people to go short the dollar into the weekend. Now, of course, if the number is particularly bad, then yeah, then I think the dollar could weaken. If you go back to my comments on Monday, remember when the Dixie was trading in the low hundreds and it was trying to nudge those lows and maybe test them. I did say, look, I think going into the NFP, we could see 102 in the Dixie, and that's exactly what we saw.
Yep.
I've been saying for a few months now, I've been bearish at dollar, bearish at Dixie, and that has been the right call, even though some people uh, somehow think it wasn't. And
But now that we're
but I did
here,
say,
now that
but
we've
I did,
bounced, what do you
yes.
do?
So now
Yeah.
here, basically, it's a tough one because I don't want to be short the dollar into the weekend. Um, so the only reason I would want to do that if the number is really weak. So for choice and with yields also with the 10-year having broken above the 50 DMA, which was at what was it 383, and that was the previous high as well. They kind of want to go towards 4% now, the 10-year US. So if the data is in line or even marginally weaker than expected, I think the dollar and yields are going to go higher in the short term.
Got it. All right.
Um, that's my view. But
Yeah, I
let's
mean,
see.
look at 10-year yields right now. I mean, we're breaking higher. You can look at the notes. Notes look like they're selling off. Actually, I just interviewed Jared Dillian of the Daily Dirt app yesterday. He's a great guy. I think he's a ex Lehman trader. I think he was over at Lehman. He's about our age, Stelios.
Yeah,
He's in his early 50s or whatever. And great guy. Good, has his newsletter he's had forever. Anyway, he
yeah.
was just saying yesterday, which I agree with him. He's like, man, all signs that I see point to lower fixed income prices and
I-
higher yields.
In
Period. End
what
of story.
horizon, though? I think in the short term, I'm
Short
the other
term.
way. In the short term, I mean for for the next 6 months, I'm the other way. I think we're going
Oh,
lower in
really?
yield first, and then we're going a lot higher. But
Okay.
first, I think we're going lower. But
So
uh,
you
uh,
think
uh,
you think yields are going lower?
yeah, I think I'm not talking about today and Monday and Tuesday, right? I'm talking about the next few months. I think we're going to um, resolve lowering yields and in the Dixie, and then we go a lot higher in both.
Oh,
So, but
okay. All right.
in the short term, I think it's short term. I mean, my short term, 6 months from now, I think we're going to be going lower first, and then we go higher.
Okay, so let's do this really quick. Gold's been perched up against the highs, and I mean, it's hard to look at gold and say this is bearish. We are at all-time highs, and we are consolidating at all-time highs. So I can't look at it and go, yeah, it looks like a perfect short right now. Hell no, the thing is strong, and I can't even argue any reason why it should be going down. What would make gold go down in your view, Stelios?
That's a very good question. I agree with you. It's still looking, there's nothing bearish about it at all.
Not a thing.
Same with equities. The S&P, nothing bearish about it. So what would make gold go lower? Um, Yield spiking higher. I mean, and I do mean spiking properly higher. I think that will make it go lower. But in the end, at the end of the day, with a longer time horizon, any dip is a buy for gold, for even for equities. So
And you
simply,
and if you look at like a long term of like this is the 10-year, just to
yeah,
give you a baseline idea, we have broken a long term, multi-year channel. Yeah, any rally prior to the 200 DMA, which would be 4.10 or 4.1%, 4 point actually it's higher than that here. But by the time we got there, the 200 DMA would probably drop a little bit lower. You'd have to imagine above 4% is probably going to find sellers in
yeah.
yields,
And
longer
also
term.
look at this chart. I mean, this chart is so close to those lows. I mean, it looks, it has let me put it this way. It doesn't look like a chart that's in danger of really spiking higher. The danger to me on this chart is for this to drop below those lows, and then what happens?
Why wouldn't going into a presidential election this next month and after a 20% rally in equities, why wouldn't I want to lock in some yield right now even at these levels right now after such a significant run I know
Yeah.
everybody's like, well, how about if Trump wins and we're going to get another boost higher, but still safety first for a lot of institutions. Anyway, we could go around and around
And
about that, but
one last comment.
yeah.
Remember what the government needs. The government needs lower yields because interest expense is skyrocketing. So usually what the government wants, the government gets one way or another. That's another thing to remember. Sorry
Right.
for being so cynical, but I'm
Uh,
53 years old. I've seen many things in my life.
Yep. I don't. I'm not going to diss you on that. All right, let's talk about today, and let's talk about trading today. So, Ryan, I'm going to come to you in a second. So, Stelios, what do you think the data is going to look like today, and how? I know you don't day trade a whole lot, but what would you be really looking for today?
Well, I think the data is probably going to come in line roughly, which means dollar and yields rally. That's what I see for today. Um, but again, I don't want to make a prediction on the numbers because it's almost random. So I really don't know. I really don't know
What?
what
You haven't
will
had a
be.
guess? You haven't had a
I
Did you
guess
didn't
for
put
the
have a
in a
guess. No.
competition?
guess?
What I would say is if unemployment ticks up again, then that's not going to be good. Because let's face it, the unemployment rate is what they are looking at. And I saw a chart today. Shit, I can't remember. Oh, sorry, pardon my language. I can't remember who posted it, but they showed that whenever there's a bottom in unemployment rate, a small bottom, that's when the Fed uh, preemptively comes in and starts cutting and it starts easing. So I think that's what they're seeing already. The unemployment rate has gone from what was it? What was the low? I can't remember now.
Wait, what?
3.4,
3.6
3.3 or something. Yeah.
3.6, 3.5, whatever. And now it's edging up. And usually when that happens, that's when the Fed starts coming in and kind of preemptively easing. So there is some rationale why they did the 50, but um, yeah, I think if unemployment rate ticks up, then that's not going to be good. Not going to be a good sign at all.
All right. So, thank you for your opinions there, Stelios, and we appreciate it. And yeah, I was just pulling up the
Don't let
unemployment
him
rate.
cop out. We want a number from him.
Yeah, did you?
Oh,
Yeah, did you
number.
give us a number?
I'll give you. I don't know. I
No,
didn't.
you better. You bet.
I'm gonna
No,
do it now.
don't
I'm gonna go
get
now.
in
What?
there. Get in there and
Yeah.
vote. Get
Okay.
in and vote. All right. And I voted, and I forget even what I put, but I think it was around 130,000. I think that's my number. I can't remember right off the top of my head, but I don't think that we're going to be too far off of expectations. But that's my own personal opinion. Ryan, so how are you going to trade this? I'm going to put this data flash that you guys get on ForexAnalytix. I'm going to move that out of the way, and I'm going to bring it back soon as that data comes out, or just before the data coming out. Ryan, how are you going to trade this one today?
Yeah, I've got my levels. I put a little quick levels guide in the chat room. Gold, we've got a bit of a range going, 26.70, 26.20.
Here's your guide.
So keep an eye. Yeah, there's a guide. We are on, as I said, we are on some close to some of these key levels. Like 147 in dollar yen. So really, if we break those, I'm going to need confirmation of breaks before I start going with them. And if we don't, then I might go against them. Obviously, as you said, taking the weekend risk into consideration.
Yeah. All right. Well, okay. So that would be on weak data. You'd see a breakdown in the dollar yen. On strong data, what are you going to do? I mean, would you chase on strong data? Would you chase the euro lower? Would you buy the dollar yen going higher? Would you actually short sterling after the overnight? Now, who in the hell backtracked Bailey's comments and why?
Pill, the chief economist Pill, did a bit of backtracking. Well, not backtracking. He just wasn't as dovish as Bailey was. So that gave
Jackass.
sterling a little bit of support. Knocked euro sterling back down again.
But we did complete the bear flag pattern, guys. That was a perfect setup and completion yesterday. I got actually limited out of my got limited out of my
shorts.
yesterday at, for that, but euro sterling reversed. And it's like, what the damn it, pill. All right. Anyway, would you chase the sterling lower today? I guess that's the question.
No, I wouldn't. I wouldn't chase the dollar higher. Let's
Okay.
put it that way. I'm more inclined to let the dollar run and then think about getting short.
Okay, so that is exactly what I wanted to hear from you, because I'm going to tell you guys right now how I want to play this is I'm only going to play a miss, and I'm not expecting it. So that's the thing, is I don't know how much trading I'm going to do today for the jobs report. Let me explain to you my thought process here. I would rather short the dollar yen today because I'd rather be long yen going into this weekend. And the only way I'm going to be able to short the dollar yen, knowing that my risk is right here at 147 and a quarter, and I closed my dollar yen shorts last night. I was short up here, and then I closed it for like 40 or 50 pips last night. I already took it off actually when it was down in the 20s, 22 last night. Actually, not too far off of the lows. When I it was just before I went to bed last night. I want to play the dollar yen to the short side, but the only way I'm going to be able to do that is to see a really crappy jobs report today, because the last thing I want to do is chase the dollar yen higher because of this technical formation. Israel and Iran pick up the momentum where they left off this week, and over the weekend, next thing you know, we're seeing actual targets being hit and civilians being hurt, which I hope isn't the case. But if that is the case, we're going to wake up Sunday morning and we're going to be trading down like that in the dollar yen. I don't want to get caught on the wrong side here, and that's why I'm only going to trade on a weak jobs report. Now, some of you might say, well, how about on a strong jobs report? You could be out there shorting the euro below 110. I don't think that's a bad trade. I just don't know if I want to do it. I'm kind of hesitant about trading a good jobs report. And honestly, I think it's going to be a good jobs report. But that's my thoughts. We're going to obviously get the data in less than 2 minutes. So, whoops, I'm going to get set up for that. Ryan, do you have any last minute thoughts before we get into the data?
No, just if you've had a good week, don't go and blow it all on this number on the roulette wheel. Sit back, watch the fun, and have a good weekend.
Great recommendation, guys. Don't try to make your week on a Friday. Dale always says that. By the way, Dale will be back, I think, on Wednesday next week. K-Man is back. For those of you that missed him in the chat room, you saw him today, but he couldn't be here today because he's doing some logistics stuff with his trip. He'll be back early next week for a few days before he has to leave again. Just letting everybody know, for those of you that are inside of the ForexAnalytix community or you listen to the Flow Show. Ryan, I'm going to bring down the data flash here. How much time we got?
15 seconds.
15 seconds, guys. Get ready. Here we go. Go. How many people have sweaty palms right now? You got sweaty palms.
Always get a tingle. Here we go.
Here we go.
254. Wow.
4.1. Oh, this is good.
Damn.
Average hourly earnings high as well.
Damn, girlfriend. Holy cow. Well, there goes the dollar yen. We'll see at 150, and look at the dollar index. Just unemployment at 4.1%. Did I mention that we are in a election season here?
Yeah, let's wait for the adjustment, the revision in 6 months, right?
Oh my God, the Aussie is going to get right, exactly. Wait a second, that jobs data did what? Look at the dollar yen is going to be trading up to 148. This is where I wanted to short it a long time ago, and I don't know if I really want to short it now, but let's take a look at. Oh my goodness gracious, isn't it? It is so funny. It is so funny, and the euro took every stop below 110. So, God, I feel like for some reason I feel like I need to, I almost feel like I need to sell like some euro yen or something. I don't know, but look at the dollar yen screaming. 127% extension. We're above 148 now. What a move, what a move, what a move. And the dollar yen looks like we're struggling as we come to 148. I think I'm going to sell some euro yen up here, guys. A little bit of risk aversion. I think that may come in a little bit later. Look at how stocks have just reversed. They spiked higher on the news and they're like, oh, wait a second. Great news. And I don't like to short stocks on good news like this, but this also means that, you know, the Fed may not be as easy, right? And maybe the stock market doesn't like that. Ryan, what's your initial gut response to this data right now?
No, it's just hilarious. I even said if it come, we could have a 250 this week during the week. If we got that, it wouldn't surprise me, and I'd laugh my nuts off. And I am laughing my nuts off because it's countered what the Fed have done with their 50 cut. You know, it's like, well, why have you cut 50? Wages have gone up to 4%, back to 4%.
I mean,
It's bonkers, absolutely bonkers.
but doesn't this is everybody that's calling for a recession. And I mean, this is just every macro analyst out there is like, oh, it's a recession. What recession? You
Well,
know,
exactly that. Again, it's making a mockery of that 50 pip cut. Now, this is where we've got to watch, because if wages keep going higher, and if if this is the start of a strengthening of the jobs market and inflation comes back, well, then you can probably knock off a couple of cuts that are expected for next year, and then that changes the whole picture again.
right?
But you know what they say, you don't forecast 6 months on one number.
Yeah. All right. Well, you know, the dollar yen just spiked right above the 38% retracement. By the way, that's the 38% retracement from the, I don't want to say it's all-time highs because that's not even close to being true. But you can see that move all the way from 160 to 140, 39 and change. We just hit the 38% retracement of that entire move just now, and we're coming off. We've come off about 30 pips from there. If you guys want
Keep
to,
an eye on yields here as well. Tens are up 395. Twos are up as well, 390 ish, 387.
let's take a look at and what's happening in yields here. I mean, yeah, they're starting to come off just a bit. I mean, you know, you got to be real sensitive to this. And like I
You
said,
got to give it some minutes. You got to give it some
yeah,
minutes to wash out.
yeah, exactly. I'm gonna be and here comes yields coming down just a hair. I'm gonna actually put us on a 1-minute chart just to give us a little bit better view here, and you can see
Yeah,
what's happening.
you got to watch the second wind move. You know, you think the market stopped, and then because everyone's still counting the beans and counting the numbers. I've got 109.60 as a level in euro dollar. Headline from Bloomberg: traders shred bets on 50 pip cut in November after jobs data.
Yeah, what are expectations now? I mean, you know, come on. Here, I'll put it a little bit different here. I'm going to put yields back up here. And Stelios, what's your gut instinct to this data? I mean, gold just got smashed. What do you think?
Yeah, reaction is actually less than I thought it would be on these numbers. And obviously, stocks always find a reason to rally, right? Lower, worse numbers, oh, that means they're going to be loosening policy, so we go up. Oh, better numbers, oh, the economy is doing well, so we go up. Yeah, the reaction is not as big as I would have thought. Obviously, dollar yen has been going bonkers. I think I don't see any reason why this move should reverse now going into the weekend. Especially
Right, that's the
given
thing,
the
right?
risk.
It's like now, I mean,
Yeah.
now this is a Friday. Is it a Friday trend day where you just see the dollar just, you know, going on a rampage? You know, does the euro trade down to 109.50 by the end of the day? You know, what are your thoughts here?
Oops, hold on. Somebody's calling. Sorry, what was the question? Somebody was calling, and I had my
Your mama.
yeah.
I was asking, does the euro trade down to 109.50 by the end of the day? What's
Well, theoretically, I think this move continues into for the rest of the day. But of course, anything can happen. But I think so. Yes.
I mean, think about the dollar, and you know, I'm gonna actually, you know what, I want to show you guys this chart, and I'm gonna come back to the three pane chart. If you look at the dollar index, and we had this triangle, right? And we are really challenging the underside of the triangle. Technically speaking, This is the level. If the dollar is going to make, if the euro is going to make a stand, or you're going to see a reversal in the dollar index, it's going to be here, because if we clear highs from today, so right now the high is 102.53. If we clear those highs from here, we are going to the 200 DMA by next week. That would be my instant reaction technically on the dollar. And then you look at what a retracement looks like. We're at the 38% retracement. We just talked about that in dollar yen as well. We would scale this and be trading closer to 104 in the next week or two in the event of that breaking. And I don't want to chase the dollar right into this level. That is not something that I want to do. And like I said, I'm real skeptical here about trading any dollars, following the jobs report, ahead of the weekend risk. So we're going to wrap things up here in just a second. Ryan, last minute thoughts before we wrap it up for the week.
Last minute thoughts. I would say keep an eye on, I think China's back on Monday.
Yes.
They've obviously been off on holiday, so I've got a feeling we're going to see
Golden Week.
their
Is that
stocks
right?
kicking on.
Is it Golden Week? Golden Week?
Yeah. So
Yeah.
that means their stock market hasn't gone up all week after putting on 8 million% in 3 days. So if that gets back on track when they open and we see another rally, then keep an eye on your commodities, copper, gold, and your commodity FX, because it could see another little rally in those.
Yeah, speaking of which, I mean, you look at the Aussie just got smashed today, but did it? I mean, it did, but we are below breakout points, so would be a little bit nervous about it, but maybe it ends up outperforming the euro a little bit more with these commodity FX, as you're pointing out. Great
I'm
idea.
actually going to nibble. I've got an itch to scratch, so I'm going to start shorting Aussie Kiwi here. Because I think
after that big run, you've been calling this thing up all week, and boy, has it gone up. And matter of fact, if you look at the analysis from ForexAnalytix, just so you guys can read on what our analysis has been all week, let me just share that with you so you guys can kind of see and go. The close above the 50 DMA should allow for a move back to the 110 level. Then we're at 110. You can't rule out 110.53. And I think we hit a high of 110.46 today. So we're about at levels that I think could cause some issues. So you have an itch.
Well, as I put out that blog post yesterday, I'm fancying this for a short, for a bit of an RBNZ play, then into the RBA. But I think that the market's getting a bit too dovish on a 50 pip cut for the RBNZ next week.
And then if you don't know where to find this free blog post from Ryan, it's Friday, thank God. You can just go to forexanalytix.com, go to blogs, and read that post right here. All right, Ryan, scratching the itch, itching the scratch. I like it. Stelios, last minute thoughts before we wrap things up here. Oh, we lost him. Shit. All right. Well, then I'll give you my last minute thoughts. I would not be chasing the dollar up at these levels. I don't know if I'd necessarily short. I'm, kind of dollar agnostic at the moment. But let's just be mindful of everything that could happen over the weekend. Prepare for that. Not let's hope, but prepare. Be aware that there could be gapping over the weekend. So keep your position sizing at a decent, manageable level. So if you get a 100 pip move lower in yen pairs, or a 100 pip higher move in the dollar Canadian, for example, or the dollar Mexican peso, or something like that, think about what could happen over the weekend and plan for it. Let's not hope for it. Let's just plan for it. As Ryan said earlier, today is not the day to be, looking to make your entire week on today. So, guys, this is the last couple of days that we'll have the ForexAnalytix. Want to come jump in the chat room with us, talk about everything. Look at K-Man wasn't on the show today, but he's in the chat room because he is on phone calls right now with some things, seeing what other people are posting in the markets. take advantage of the pricing that we have on ForexAnalytix. It is our 8-year anniversary sale. The 40% off annual price gets our monthly, your monthly month to month on ForexAnalytix down to a ridiculously inexpensive level for what you get. Download the mobile app, get the analysis, jump in the chat room, be chatting with Ryan and myself for 15 hours a day. Between Ryan and myself, we cover probably about 18 hours a day in the market. So, and that's just talking about the two of us. So come join us in the chat rooms. Thank you guys for being here on non-farm payroll holiday. Ryan, have a great weekend. Thank you so much. I'll be here on Monday. I don't think Dale's here, so just, you know, he should be back, I think, middle of the week next week from his trip in Chicago. And then you guys can tell him how much you missed him. So Ryan, thank you so much for being here and keeping me.
Cheers, mate, and well done for holding the show while Dale's been out.
Thank you very much. It's been I have a good face for radio, so it all works out okay.
Me too.
Ryan, thank you so much. Everybody, thank you for your support, continuous support of what we do here at ForexAnalytix. We appreciate each and every one of you listening in and being interactive. I'll see you guys on, I'm actually going to film the week ahead video here in a couple hours before I head out to the lake and do some wakeboarding, because the lake is still freaking hot and it's still over 100 degrees here. So I'm heading out to the lake with some friends today. So see you guys later. Have a great weekend.